So, good evening, class. Good evening. Sorry for keeping waiting a bit tonight. Good evening. How was our day? Hope your stress is not much today. Good evening. Okay, the voice is too low. Let me try and increase it. So, can you confirm if you can hear me better now? Yeah. Oh. So tonight we need to manage our resources very well, very, very well. And the time is fast approaching for the exam. So I will still have a lot to cover. Like today now, I wanted to cancel the class before, but I just feel like I need to do this because I have a serious electricity fault in my area. So I need to just make sure that I have at least some kind of battery percentage on my laptop that can take us roughly 40 minutes. So I want us to make good use of it. So tonight we'll be looking at IFRS 5, no current asset held for sales and discontinued operation. And it's part of the standard that was tested last diet. And for a couple of years too, there's been a testable or an examinable standard. So I want us to pay good attention. It's not that much, it's very simple. After that, so I don't know how we're going to time our timetable this time because we need to cover some key aspects of the standard that's under my own control. So we still have like IS 8, we have IS 10, we have IS 16, we have IS 40, we have IS 36, etc. like that. I would still like us to look at before the exam starting. So tonight we are going to start with IFRS 5. IFRS 5 is non-current assets held for sales and discontinued operation. Let me share my screen. Please confirm if you can see it. So I won't take much of our time. I just want you to have a clear understanding around it. It's a bit tricky, but it's something we can understand quickly. I'll send the YouTube link to the group chat. I'll send the YouTube link to the group chat, so kindly confirm it from there. Please confirm if you can see my screen. Can you also confirm my sound if I'm audible enough? I've shared the YouTube link. So IFRS 5 talk about non-current assets held for sales and discontinued operation. So that is two key aspects that can stand alone on their separate own. We have non-current assets held for sales, and we also have discontinued operation. What do we mean by non-current asset held for sales? What do we mean by discontinued operation? Non-current asset of held for sales, these are classes of assets. These are the type of assets that they are. These are the group of assets that the carrying amount will be recovered principally through a sale transaction rather than through a continuous usage. So what do they mean here is that these are the type of assets that their principal value or the satisfaction of them will only be recovered through a sales rather than continuing usage. It means that the only way to recover their value, the only way to recover their principal amount is only through sales rather than continuing usage for operational purpose or for any other purpose. So these are the assets that the organization has put up for sales. However, so far as accounting standard that guide this particular operation, there will be some key recognition criteria that must be met before a particular asset can be classified as non-current assets held for sales. And I want us to take good care of, to take good look of these criteria. There are basically 5 criteria that must be met before a particular asset can be classified as non-current assets held for sales. Number 1 is management commitment. The management must be ready and committed to sales, and there must be a management approval, maybe through the board meeting, or the management there must be an approval that show that okay, we are ready to sell this asset. There must be an approval through the management board meeting. Secondly, sellable condition. It means that the particular asset must be in a sellable condition. What do they mean by sellable condition? Sellable condition is that the asset can be sold in an instant transaction without the need for any form of adjustment or any form of workmanship that would be needed on that particular asset before its sales can be initiated. The asset must be in a position that can be sold in an instant way or in an instant manner. The asset must be in a good condition, working perfectly, without any necessity to incur any other extra costs before we can make a sales of that particular asset. Now, number 3 is active marketing. The organization must be doing everything possible to make sure that the asset is being sold within a stipulated time. The organization must be doing everything possible. They must be doing the necessary marketing. Not that they will say that okay, this is a non-current asset for sales, and there will be any awareness to the people that will buy it. Just kept it somewhere and you say it's a non-current asset for sales. Are you doing any active marketing on it? Do you create awareness to people that okay, this particular asset is going or is for sales? Then number 4 is reasonable price. The value of the asset must be reasonably measured. The value of the asset must be reasonably measured. And lastly, the sales of the asset is expected to take place within 1 year from the date of classification. The sales of the asset is expected to take place within 1 year from the date of classification. However, on this 5th point, there are 2 criteria that we can call like more like a sub-criteria under this. Criteria 1 is that in a situation whereby the company have met up with all the above listed criteria, but still they can't see a buyer for that particular asset, which means that there is no sales or there is no buyer that comes to show interest for the particular asset that is being held for sales within a period of 1 year, and the organization has continued to meet up with the remaining criteria. What is going to happen? If that is the case, please can jot this down. So if there is no sales to that particular asset within a period of 1 year, now we are going to ask 2 questions. Question 1 is, why is there no sales? Even after meeting up all the necessary criteria, management commitment, sellable condition, active marketing, reasonable price. So why is it no sales within 1 year? We need to know if the reason behind no sales is as a result of situation out of the control of the organization, a situation whereby there is no buyer for that particular asset, even when the asset is being quoted at a reasonable price, there is active marketing, it is in a sellable condition, and the management are committed to ensuring that there is sales to that particular asset. They can't still find buyer to it. It's very possible. That kind of situation is out of control of the management, is out of control of the organization. If that is the case, the asset will still continue to be classified as non-current asset held for sales. However, if you ask that why is it that this particular asset is not being sold within a period of 1 year, what happened? If the reason is within or as a result of the organization personal incompetency or personal showing of nonchalant attitude, or the reason is something that they decided to do so that there won't be sales on that particular asset, that is the reason why they can't find a buyer for the asset within a year, that means that your asset will be reclassified back to IFRS 16. property, plant, and equipment. This is another standard we'll be looking at. And after reclassifying it back to IS 16, we are going to test the expected depreciation that would have happened within this 1 year that the asset is being classified as non-current asset held for sales. We are going to test the depreciation and depreciate the value of the asset. And also, if there is any impairment that has occurred, we are going to take that into consideration to depreciate and impair the value of the asset and put the now carrying value back to property, plant, and equipment. These are the necessary 5 conditions that must be met before an asset can be classified as non-current asset held for sales. So this is what we have. The reason is within the control of the management. You classify it back to previous classification, depreciate or amortize for the period of the asset. But for the period, the asset was not classified as held for sales. Reason 2 is beyond the control, continue to classify it. So we look at the accounting implication of classification or classifying an asset as non-current asset held for sales. One of the accounting implication is that the moment an asset has met up with the necessary conditions, with the above listed conditions. Let me check if there's any message. Okay. I think I have a message in the box. I've sent the YouTube link to group 7. Please kindly check. Let me confirm. Group 7. This is it here. This is the YouTube link here. So, what will be the accounting effect of classifying asset as non-current asset for sales? Number 1 is depreciation and amortization 6. Once you classify as an asset as non-current asset held for sales, you stop depreciating that particular asset. Number 2, the asset become automatically a current asset. Once you classify as an asset as non-current asset held for sales, the asset is now automatically to become a current asset. It won't be a non-current asset again. It's going to be a current asset because the sales is expected to take place within a year. So the first thing is to stop depreciation and amortization. The second thing is that the asset will automatically become a current asset. The third effect is that reclassify the asset from previous classification to a new classification known as non-current asset held for sales in a separate line. So in our okay, that is the fourth condition. So the third condition is to reclassify it from being a non-current asset to a non-current asset held for sales. And the fourth one is that the asset should be presented separately in the statement of financial position under current asset. So if you check some of the published financial statement of some of the quoted or listed companies in the stock exchange market, it's likely that you see a separate line item of a particular asset that is being reclassified as the current asset for sales. They will present it separately, although it's going to be under current asset, but it's still going to be separately, identified in a separate line that okay, this is a non-current asset for sale. They will differentiate the value for that particular asset from other value of the non-current assets. So the measurement value should be the lower of the carrying value and fair value less estimated cost to sales. Non-current asset for sales should be measured at lower of its carrying value and fair value less estimated cost to sales. So this is the accounting entry here showing that in line with IFRS 5, non-current assets for sales should be measured at lower of its carrying value and fair value less cost to sale. Lower of these two will be the value that we're going to use. On a note, whenever the carrying value is higher than the fair value less cost to sales, the difference represents impairment loss and should be recognized in the profit or loss. Accounting entry, you debit your profit or loss, other comprehensive income, and you credit your current asset held for sales. In line with IFRS 5, in no circumstance should an abandoned asset be classified as non-current assets held for sales. However, IAS 36 require an asset that is being abandoned as an internal indicator of impairment. If you look at the meaning of the current assets held for sales, it's so clear that these are the type of the assets that the principal value will only be recouped through sales rather than continuous usage. However, we should not take that as an excuse for us to classify an abandoned asset. An abandoned asset is different from an asset that we decided that the only way we can recoup the principal value is through sales. An abandoned asset is different from that kind of asset. If you abandon an asset, you cannot call it a non-current asset held for sales due to a lot of reasons, which I believe one of these reasons is that the initial reason for abandoning the asset is not as a result of the management having intention to sell it out. Another thing is it won't be in a sellable condition. An asset that you have abandoned for a very long period of time, you will still need to work on it. There's no how you want to do it. So with this, some of the reasons you cannot classify, or at any point in time, you should not classify an abandoned asset as a non-current asset held for sales. So this is the first section of the standard, which is non-current asset held for sale. We'll be looking at discontinued operation. But before that, let me ask if let me allow us to unmute ourselves if there is any question. Yes, non-current asset for sales are not depreciated. You are not depreciated. Depreciation stop immediately. We classify an asset as non-current asset held for sales. Please let's mute our mic if you are not asking questions, please. Please let me call us one by one. Madam Ifunaya.
Yes, good evening, sir.
Good evening, ma'am.
Thank you so much for the class, even when it's beyond your, even when it's too stressful to do that. Please, I have a question.
All right, ma'am.
Is a current asset should be made sure that the lower of its current value and fair value less estimated cost to sale. I don't know if it's because you're trying to mix up with time, but I really don't get the explanation around it.
So this is the explanation around it. Let's assume your company have a particular asset that they want to sell out to Mr. Ficent. So now the value of the don't even let me use someone. Your company have an asset that they decided that okay, we want to sell this particular asset, and it has met up with all the listed criteria. But there is an acronym for that particular criteria. I think it's MAX. Is it MAX? Let me quickly help you to check. So that you can put that down in the notes. I think it's MAX. Yes, MAX. MAAXX. Is it MAAXX? MAX. So that is the acronyms that we use to capture the recognition criteria of IFRS 5. So what we mean by carrying value, lower of carrying value, and fair value less estimated cost to sales. If you can remember when we are discussing IFRS 13, we mentioned two types of markets, most advantageous markets, and so we mentioned two types of markets, and one of the clear differences between market 1 and market 2 is that one have a transaction cost, the other one does not have a transaction cost. So what do we mean by transaction cost? If you say fair value, yes, we are going to share the material after the class. If you talk about the fair value of an asset, before you can arrive at the fair value, you might have called someone that will come and help you to determine that fair value. If you did not call someone to help you to determine your fair value, you may need a lawyer to do that for you. So the price you are going to pay the person that will help you to determine it, or the price you are going, the legal fee you will pay is your what is estimated cost to sales. Which means that if you are not going to do that fair value activities, you will need to pay that particular person. So if there is any question that I want you to use the fair value and there is estimated cost to sales that you need to remove from that fair value, they will clearly state it so that you won't mix it up. So fair value, the estimated cost to sales is just the additional cost you incur before you can get your value, you can get that particular fair value that we are talking about. So I don't know if that answers your question, man.
Okay, sir.
Huh?
Yes,
Hello?
sir. Yes, I'm with you, sir.
So just have your back of your mind
that
what they mean by, okay, let me come again. You know, there is carrying value.
Okay.
Do you know what they mean by carrying
Yes.
value?
Yes.
Now, they now say,
Yes.
and fair value less estimated cost to sales. How will you determine a fair value of an asset? How will you determine it? If you can remember from our IFRS starting class, I mentioned that we use the value of a close of an asset that they are in the same class or in the same category. That is the determination one. If you can remember our last class, I made mention of using an asset that they are in the same class. If you have an asset that they are in the same class, you can use to determine the value. However, if you don't have an asset that they are in the same class, there may be a need for you to call a valuer that will come and value that particular asset. I will come and give you the fair value of that particular asset. So the money you are going to pay that particular individual that you call to come and help you to value it, you are going to remove that from that value, so you will now determine, okay, this is the carrying value of the asset. So that is what they mean by next estimated cost to sales. What are the costs you incur before you can actually arrive at this fair value? Do you incur any cost? How do you come about your fair value? What do you say?
Sorry, if I get it clear, sir.
Okay.
That means this current asset should be measured as either the carrying value or the fair value minus whatever cost you incurred trying to sell it, maybe like a slate, the letter fee, or whatever other cost incurred. That means the fair value minus that cost and the carrying value. So you are now trying to weigh between the carrying value and the fair value, whichever one that is lower. That is what the current asset is measured at.
Exactly. But don't forget that before you arrive at that your fair value, you have removed one particular expense from it.
Yes. I get it now, sir. Thank you so much.
All right. Madam Afsat. Madam Afsat.
Yeah, hello, good evening, sir.
Good evening.
My question is, what's then if we talk of non-current asset held for sale, what of inventories?
So inventory is
asset where a company deals with the sales of assets. Thank you, sir.
So inventory is totally different from non-current asset for sales. When we talk about inventory, we are talking about what the company transacts in their day-to-day activities. What the company, the products that the company exchange for value with their customer in their day-to-day activities. If you have a company, you are into production of cars, your inventory is your cars. Yeah, all those cars that you have, that is your inventory. However, maybe part of the trailer that you use as your delivery van, part of the trailer that you use as delivery van, you are not selling that particular trailer. What you are selling, they are the cars that you made from your company. But part of the trailer that you use as delivery van, you now decided that, okay, maybe you have 5 trailers, and you say, okay, part of these 5 trailers, you are not using all these 5 trailers. What we really need is 3. So the management come together that, okay, one of the best way to do our capital restructuring, maybe there's financial distress in the company, and the company feel like, okay, one of the best way to do our capital restructuring is to sell out those assets that we are not used, or we don't use them concurrently. So you now put those 2 assets held for sales. So yes, inventory is automatically a current asset. Why IFRS is talking about? Yes, exactly. So you now put those 2 assets for sales. It's different from what you transact in your day-to-day activities, even though they are both vital. But what you transact in your day-to-day activities are not those 2 classes of assets. You only put them for sales due to management decision. So the clear difference between them is that your inventory is what you transact your day-to-day activities, while your IFRS 5, they are your non-current asset that is being used for administrative purpose before. They are your IS 16. They are your IS 16 assets, that property, plant, and equipment that is being used for your administrative purpose before. But now you decided that, okay, we can't continue to use them again, or we don't want to gain our to derive value from them through usage again, rather than we now decided that the only way we can regain our principal amount is through sales. You don't want to use them for administrative purpose again, but rather what you want to use them for, you want to dispose them off so that you can recoup the value on them. So that is just the difference, man. I don't know if that answers your question, man. All right, man. So, Mr. Prudence.
Okay, good
Mr.
evening.
Prudence. Good evening, sir.
Yeah, good evening. Yeah, good evening, sir. All right, my question is still on this fair value less cost to sell and carrying value.
All right,
So
sir.
I want to know, why should we use lower of cost? Is there any concept that back it up? Why should we use lower of cost in a sense of any of them?
So, one of the reasons for that is to ensure that we did not overvalue our assets.
Sure.
No, we did not overvalue our assets in order to avoid overstated of the value of the asset. So the reason why the standard is insisting that the value of the asset should be lower of carrying value and fair value less cost to sales is because they don't want an organization to overvalue the value of that particular asset that is being held for sales. Yes, that is the reason why.
Okay.
And to have some kind of transparency in valuation. If that is not in place, organization can just wake up and say, okay, our carrying value is 100 million, or an asset that worth 50 million. But now you have to consider two different values together and pick the lower of the two. You have to consider your carrying value, and you have to look at, okay, what is the fair value? What is the more like a market value of that particular asset you want to sell? So just like saying you need to consider the market value and the carrying value, and lower of the two should be what you should use. It is expected that even if your carrying value has been overstated, the market value will not be overstated. And at the same time, if you have understated your carrying value, the market value should be able to show you that no, you have understated it.
Okay. So I'm clear. Thank you.
All right, sir. Mr. Olakunle Lawa.
Good evening, sir.
Good evening.
So according to your explanation just now, so if the company has actually understated the value in their carrying amount, so why should they still stick to the carrying amount? Why not the revalued amount?
So please come again your question.
You just explained now that we need to pick the lower of the carrying amount and the revalued amount less cost to sales.
Yes.
The fair value less cost to sales. So I'm now saying, you explained that some organizations, they would have actually overstate the carrying amount, but some, due to depreciation and every other thing, then the carrying amount would have been reducing. So why would they still have to stick to the lower, which is when the carrying amount has been reduced drastically due to depreciation? Why not just stick to the revalued amount, less cost to sell?
Okay. One of the reasons for that is in a normal human scenario, it is assumed that for companies that owns a particular asset, the book value of the asset, the book value that we use to carry in our asset, is always being overstated, which is the reason why the tax authority will not allow or are now categorizing our depreciation as non-allowable expense, and there's introduction of capital allowance to make it more transparent. So in a recent scenario, it is assumed that the carrying value or the book value of an asset is always being overstated. That is why you need to compare with, okay, the value that we have in our book, what is the market value? Because there is no how an organization will decided willingly undervalue their assets. In a very few scenario, that is when you have the carrying value lower than the fair value. In the very few, the fair value is always lower than the carrying value. The fair value is always, not always, in most sense or most times, the fair value is lower than the carrying value. But in a very few scenario, when we have the carrying value lower than fair value, that means that shows the true usage or the wear and tears on that particular asset. So that is why you can't just shift, okay, because my carrying value is now lower than the fair value, let me go with the fair value. No, that shows that the wear and tears on that particular asset is properly captured. So that is why you need to pick the lower between the two. I don't know if you get me, sir.
Very well, sir. Thank you.
So just the standard just to ensure that the asset is not being overstated in the financial statement.
Thank you, sir.
All right, sir. So let's look at the remaining part so that we can call it a day on time. Don't forget, this standard was tested last diet. Tested last diet. So who knows? They may decide to bring it again, and they may not. So discontinued operation, just like I define non-current asset as a single set of assets that is being that the principal value will only be recouped through sales rather than continue using. Discontinued operation represents a disposal group or a group of an asset that is being held for sales. Now, the difference between discontinued operation and non-current asset held for sales is that in a disposal in a discontinued operation, you can have multiple non-current assets in it. So it's not just a single non-current asset. So, example of discontinued operation, we have subsidiary to be disposed by the group. We have a branch of an entity held for sales or to be disposed. We have a department of an entity. We have it can be a segment of an entity. So the difference between non-current asset held for sales and discontinued operation is that discontinued operation can comprise of more than a single non-current asset. So these are the examples of discontinued operation. We have the measurement of disposal group. In line with IFRS 5, disposal group should be measured at lower of carrying value and fair value less estimated cost to sales. Whenever the carrying value is higher than the fair value, less estimated cost to sales, the difference represents impairment loss and should be recognized in profit or loss. So this is the accounting entry, just like we have it as non-current asset for sales. So presentation of discontinued operation. IFRS 5 requires that discontinued operation should be presented on the face of comprehensive income, comprising the total of the post-tax profit or loss and also the post-tax gain on disposal. So this is more like a segment of the business that we are trying to dispose of. So IFRS 5 requires us to show the post-tax profit or loss, that is after tax, profit after tax or loss after tax, should be shown in the book of the parent company. So basically, you have two questions here. Not that will be something we can look into by ourselves, but let's look at this first one together. It's going to be a practical class. So you tell me what to do. How should we treat it? So let me read the question. Hope everyone can unmute themselves. It's only this first question we're going to solve together. You can practice the second one by yourself. And if we meet in the geometry class, I could have gathered more past questions. But even with this, if you look at the past question that IFRS 5 is being tested, you will see that yes, these are the things you should be able to do. Mostly what they will ask about the recognition criteria, what happened after you classify an asset as a current asset for sales, and also the accounting entry. What value should you use to capture the non-current asset that is being classified as held for sales? So I think everyone can unmute. Okay, yes, you can unmute. So let's read the question. ABC Transport owns a luxurious bus, and the carrying value amounted to 20 million at third year, at the 3 years end. Sorry, I think I need to come here. ABC Transport owns a luxurious bus, and the carrying value amounted to 20 million at year 3, end 31st December 2018. The company currently holds a VIO certificate of roadworthiness and currently used to convey passengers to Lagos from Abuja. At the year end, the Director of Finance classified the asset as non-current asset held for sales without obtaining management commitment to sales. The asset is currently marketed on OLS platform for sales. The current price attached as sales value fall below current market value of 28 million. Require discuss how the above events should be calculated discuss how the above events should be calculated in the financial statement. So, is there anyone that can give a try to this? Is there anyone that want to try? Maybe I should allow us to see the question again. ABC owns a luxurious asset or luxurious bus that is being used to convey people from one location and to another. And the value of that bus at the third year is 20 million. So the company, the bus, have a VIO certificate, and the director just wake up one day and classify the asset as a current asset held for sales without obtaining management commitments to sales. So is doing everything. The management is doing everything to ensure that there is sales. It's on OLX, and they told us that the current price attached as sales value fall below current market value, which is the fair value 28 million.
Hello, sir.
Value 20 million. Yes, I'm with you. I'm with you, sir.
Okay,
Hello,
I just
sir.
want
You can go on.
to try the question I just want to try
No
it
problem.
now.
All right,
I think. Okay, so based on the question now,
Yes.
there are 4 criteria that before an asset can be classified as held for sale, which the asset in question does not meet one of the criteria, which is the management commitment. Because according to here now, it shows that the director without the management.
Hello, sir.
So according to what you just read, it shows that it does not meet the category of being classified as held for sale because it does not meet that requirement. We say that the management must commit to the plan. So that's my own contribution. Thank you.
So, are you saying we cannot classify the asset as a current asset for sales? Hello, sir. Mr.
Hello,
Olafe?
sir. I can't see the. Yes, sir. I'm hearing you. I can't see the question very well. It's like the question. I cannot even see your screen now. So I think I heard where you read. Yes, I can see it now. You said at the year end, the director of finance classified the asset at N, okay, F
Current
for
assets
sale.
held for sales
So
without obtaining management
without
commitment.
being obtaining
Management commitment.
it seems it's your network. I don't know. I can't see your screen again. But in a nutshell, without obtaining the management commitment, without obtaining the management commitment to sales. So this shows that we cannot, because it does not meet that criteria, which says that the item, before one of the criteria, that item must be, the management must committed to the plan, to the sales of the asset. So therefore, it fails to be categorized as held for sales. Thank you.
All right. Thank you very much, sir. Thank you very, very much for that. So that is just it. Just that if you want to answer this question in the exam, you may need to write one or two notes, one or two stories around it by telling them that there are 5 criteria that must be met before you can classify an asset as a current asset for sale. However, one of these criteria has not been fulfilled, which is obtaining management commitment to sales. So due to this fact, the organization cannot classify the asset as non-current assets held for sales. Another thing is that when you classify an asset as non-current asset for sales, the asset should not be in use again, but it should be in a sellable condition. Should be in a sellable condition. So the organization does not meet up with the criteria to classify the asset as non-current asset held for sales. However, I want us to take note of something. In an ICANN question, it's not necessarily that they will give you all the 5 conditions. They will only give you 2 or 3 conditions. However, they will let you know if any of the condition is not being met. Like this place now, it's sure that one of the conditions has not been met. But that does not mean that until all the remaining 5 questions, all the 5 conditions are met before we can classify an asset as non-current asset for sales. So in a standard question, they may only list like 2 or 3 conditions that okay, these are the criteria that have been met. However, if there's anyone that is not being met, they will let you know. But if they are silent about it, you will not say that okay, because I can only see 3 or 4 criteria and they not give us the 5th one. So that does not mean that you cannot classify it. But if there is any one of these conditions that is not being met, they will let you know in the question, like what we have here now. So from this question now, these assets cannot be classified as non-current asset for sales. However, are they being the management commitment is being met already? What will be the value of the assets? So the value of the asset is going to be lower of carrying cost and fair value less cost to sales. That means the value of the asset will be 20 million. Value of the asset will be 20 million. I don't know if you get my point here.
No, sir, repeat.
Yeah.
Okay, what I say is just like Mr. Owolafe have answered that the asset cannot be classified as a current asset for sales. Yes, because one of the conditions have not been met, and the condition is management commitments to sales. So the finance director have not seen the approval of the management before classifying the asset as non-current asset held for sales. And due to that reason, the asset cannot be classified as non-current asset held for sales. So, and I'll say that should in case we are told that the management concept have been met and the management have approved it, if that is the question, what will be the value that we are going to recognize the asset? What will be the carrying value of the asset? So that is when I say that, just like we just read it in our notes, that the carrying value should be, the value of the asset should be lower of carrying value and fair value less cost to sales. I say down, the carrying value in this question is 20 million and the fair value less cost to sales is 28 million. Is the market value. So I'm trying to let us know that I didn't think they have met with the necessary condition. All we are going to do after stating all the story is that there are 5 conditions that must be met. This condition 1, condition 2, condition 3. From the above question, all these conditions have been met, this condition have been met. Due to this reason, the carrying value of the non-current asset held for sales will be 20 million. I don't know if you get me now.
Yes. Boss, please, I have a question.
Okay, you can go on.
Just like you said earlier, what if they did not give us the 5 conditions that must be met? Maybe let me say that they just gave us 3 and give us were met. So should we assume that that it is sellable, that we can sell it? I don't know.
Yes, if they did not give you the 5 condition, you get it's possible. Now let's look at this condition. How many conditions do we have here? Let's look at it. The asset is in a sellable condition. No, they did not tell us. They did not tell us from this question that the asset is in a sellable condition. But however, they have given us something that will make us to know that it's in a sellable condition, because the serious was and the carrying value, they told us that the company currently hold the FIRO certificate and currently used to convey passenger to Lagos from Abuja. So if the asset is not in a sellable condition, you will be using it to convey passenger from Lagos to Abuja. So that have met up with that one criteria. Another thing is, okay, management commitment, that is true. The asset is currently marketed on OLX. This is the management are doing everything to ensure that there is sale. That is advertisement. Reasonably measured. That is 4. I think we still have one condition here that is not stated. Still have one condition. Let me check.
The management commitment and being sold within 1 year.
1 year.
Number 1 and 5.
Yes, from here now, you not told us that maybe the asset is being sold or it's not being sold within 1 year. But you can see that at least 4 of the conditions are present here, and they told us that one of these 4 is not being met. But here, if they told us that the finance controller have obtained management consent, have obtained their management approval, we don't wait till we now see that the asset is going to be sold within 1 year before we decided that, okay, these assets are met up with the criteria of recognizing it as a non-current asset for sales. So what I'm saying in a nutshell is that in a question, they may not give us all the 5 criteria, but they will let us know. One thing that we are very sure is that they will let you know if any of the conditions are not being met. They will let us know. So if they don't told us that, okay, I'm with you. If they not told us that none of the conditions have not been met, that means that all the necessary conditions have been met.
Sorry, sir. Does it not mean that if one of the conditions is not met, it nullifies the item from being?
Yes, it's nullified. It's nullified. It's nullified. But they will tell you which one is not being met.
Okay. So once they mention it and there is, you notice that this criteria is not met, that means that item should not be classified at all.
Yeah, it should not be classified at all. However, if you don't forget, when I was explaining the 5th condition, that the asset is expected to be sold within a year. I have it here in the question. I have it here in our notes. The asset is expected to be sold within a year.
Yes, I remember. But there are 2 questions to be.
That why is it not being sold? In case they were unable to sell it within 1 year, we need to know why. Why is it not being sold within that 1 year? If the reason is out of or beyond the control of the management, we can still continue to recognize it as no current asset for sales. But if the sale, if that reason is within their control, is what they decided within them that we just want to do it that way, that means that they have violated the recognition criteria. So we need to reclassify the asset back to IFRS 16, which is property, plant, and equipment. Then we now do the depreciation for that 1 year period that we have put it under the current assets for sales. We now do the depreciation for that 1 year and depreciate the value. You can also check the question, the part further that I normally send to our group. See when IFRS 5 is being tested. Go through how they set their question, see what their solution look like, compare it with your notes, and if there's any question, you can let me know. Mostly I can do repeat question. They may not repeat last year, but they can repeat 2-3 years on for you. In fact, I can remember very well during our own exam when I was writing my final stage. I also, the first time I write the final stage, I take on 5 papers. I have 2 reference, corporate reporting and case study. So when I want to retake the following day, then I want to retake my corporate reporting and case study. The same number one question, so God will made me, the same number one question that I wrote last diet that I failed is the same thing they bring again. Same thing, same additional information. In fact, I can remember very well, it's a group account question. It's a group account question, but the group structure is a bit technical then, and that will be the first time they are testing that particular group structure. So they bring that same thing back again, that same question, same additional information. There are 5 additional information, they bring it back again. Those 5 are brought back again. Same standard under each additional information. So I'm not saying that they will repeat your own last question too, but if you try and at least solve 1 or 2 past question under IFRS 5, you can check through the Panfeda guidance. You will see it, the years that it's been tested. You can just decide to check 2 or 3 of it. There are always these 15-mark questions, and 15 marks in ICANN question goes a long way if you are able to get it. That may be the question that makes difference. Even 1 mark goes a long way. 49 and 50. God lead us through and count us among those that will pass this exam these days by God's grace. Do you have any other question? Do you have any other question? So if there's no other question, handing the cap was.
Excuse me. Sorry, sir. I have a question.
All right.
Yeah. When an asset is held for sale and the asset could not be sold for that 1 year, you say it will be reclassified again. I just wanted to elaborate more on that.
We need to know the reason why it's not being sold within 1 year. We have it in our notes. We need to know the reason why. What is the reason? What happened when the asset is unable to be sold within 1 year? 1, if the reason is within the organization control, within the control of the entity, you do what? You reclassify it back to PPE and do the depreciation for that 1 year period that you have reclassified as head for sales. However, if the condition is beyond their control, maybe sometimes even it happens within us that we want to sell a particular asset and we can't find a buyer for it. So if that is the reason why, that reason is beyond the control of the organization, we'll continue to reclassify it as non-current asset head for.
Okay.
Hello, sir.
Yes, I can hear you.
Hello, good evening, sir.
Good evening.
Okay, sir, please, can you tell me the full meaning of those marks, the MAASS, so that I can put it down on my notes? Hello?
Sorry, I should tell you what?
Hello, do you hear me, sir?
Yes, I can hear you now.
The meaning of these marks, the meaning of the marks, MAASS. I want to list them on my notes.
Okay. The acronyms for recognition criteria. So the first M is management commitment. So the second A is active market. There's another A, Abby.
Yes, sir.
Okay, 1 is active market.
Is R, sir.
R is R.
MARST. Yes.
Okay.
So the out there is reasonable market. Reasonable price.
Okay.
What do you have there that?
S is sellable condition.
Sellable condition.
And C is the sales of asset
within a year.
Sir.
Okay, sell
will you drop notes for us after the class?
What do you say?
Will you drop notes for us after the class?
Yes, I will drop. Yes, I will drop it. I will drop it in the class right now.
Okay, thank you.
All right. So
thank you, sir.
Hello,
all right,
sir.
so yes, I'm with you.
Hello, sir. I want to ask, because even in that question that we just treated now, you keep using however. You know, when we have already said the assets cannot be uh
Classify as
cannot
the
be
current
classified.
asset.
Yes, because of the condition that has not been met. But you keep using however in the exam. Can
So
we still state it like that? That however.
no, you don't need to state it like that. However, the
Okay.
reason why I say however, I'm saying that should in case in our own question, maybe when we get to the exam, then I tell you that the management approval have been granted to the finance director. So that means that they have met up the necessary criteria. That is when I use the word however. That if you have it that way,
Okay.
what we are going
Okay.
to do
Okay.
is to look for the price, the value we are going to recognize in our book. And
The
don't
lower
forget, I
between
say,
the
yeah, the
carry.
lower between carrying value and fair value less cost to sales will be
Okay.
presented separately in a separate line
Okay.
under our current assets.
Okay. Okay.
The X is sellable condition.
All right.
That's the X
Thank you.
sellable condition. All right, all right, sir. So all right, so I think we can call it a day.
Hello,
Thank you
sir.
very much.
Hello, sir.
Yes, I'm with you.
Eh,
I can hear you.
Okay, I
Hello.
think I am. I don't know. Maybe I'm the only one. I can hear you. I think I'm the only one having the network issue. I don't know because your voice is fluctuating. I mean, your network is fluctuating, so I'm barely hearing you. But based on according to
Oh, sorry about
one
that.
of the
That is the
colleagues
sound.
just asked, one of the colleagues, yes, hello, sir. According to the
Yes,
question, I just want to ask a question. You know, you said, you know, part of the condition now, which is that 12 months, within the 12 months, part of the conditions. And you now said that if it is due to the circumstance beyond the complaint, beyond the entity, that if it is due to the external factor, like maybe there's no buyer for it, that we can still be carrying it as, we can still be classifying it as asset held
No
for sale,
problem.
even after
Yes,
1 year. Even
yes,
after 1 year. But
yes.
but part of the condition is that okay, oh, it must be sold within 1 year. Though if there's no
Yes,
any external factors, like take for instance, like during that 2020 COVID-19, you know that in that process there was a breakdown in operation and all that. So that one might even lead to that condition. But if there is no buyer, maybe there is no any natural disaster that's going to affect like that COVID-19, and within that year, because of there is no buyer, and we said that it must be sellable and there must be market. There must be market. I think part of the condition is that there must be market for the asset before such asset can be categorized as asset, non-current asset held for sale. So it shows that there is no market for it. To me, that is, I just want to get the clarification of this now, because I think you understand what I mean, that there must be a market for an asset before the asset can be classified as non-current asset held for sale. And if it is within 1 year and nothing like maybe the natural disaster and the market, the asset will not be sold within that 1 year, how is it possible that we can still be, classify it as non-current asset held for sale? Thank you.
So one of the if I get your question very well, you're asking that in a situation whereby the company were unable to sell the asset within 1 year, why would they still classify it as the current asset for sales? So the conditions are very clear. So just like you cite an example of COVID-19. Now, if COVID-19 is something out of their control, there is no how the company can do anything to that. It's not something that they can control. The company still have the grace to continue to classify that particular asset as non-current asset held for sales. Now you talk about active marketing. So what I say is active marketing. What I mean by active marketing is the company must be, you can't tell me that you want to sell a particular asset and you did not create any awareness. You kept it in your book, you are not creating any awareness. There is no publicity that, okay, this particular asset is for sales. That is not active marketing. Active marketing will be in place when you create awareness to the general public, to your likely or potential buyer, to those people that can buy the asset, that this asset is available for sales. After you have done that and you have done all the necessary part of it, and you still can't find the sales, that is not what you can control again. That is not what you can control. Another thing is to check, just like we have it here, that the price must be reasonably measured. You can't call a motor vehicle that worth 5 million for me 50 million, and you tell me that because you have active market, you have this, you have that, you want a buyer to come and buy. Why should I buy a motor vehicle that I can easily get somewhere else 5 million, and I'll come to you and buy it 50 million? It's not possible. So you must take into consideration all these above listed conditions before you can know that, okay, the reason for non-sales of this particular asset within the 1 year is not something within the control of the entity, or is something within the control of the entity. You should take into consideration of every other factors. And if after taking into consideration of every other factor, the company can still find a buyer yet, then that is not within their control. The standard gives them the grace period to continue to recognize that particular asset as non-current assets held for sales till when they will find a buyer, or till when they stop meeting any of the necessary criteria. I don't know if that answers your question, sir.
Yes, it does. No problem. Thank you. Then another thing, what about is this the end of the IFRS 5, or are we going to continue later?
So okay, this is the end. This is the end. And if you, that is why I said check the what is it called? The past question, this thing that they sent to the group chat. Check when IFRS 5 is being tested. Look at the dimension of the question they ask. If they don't ask you about the criteria, they will ask you the accounting entry. If they don't ask you about the criteria, accounting entry, they will ask you that what will happen after classifying an asset as non-current asset for stop depreciation. It's going to be a current asset. It's going to be presented in a separate line as non-current asset for sales. So if they not ask you about that, they will ask you, they will present a scenario for you. They will give you an accounting entry. After giving you an accounting figure, so they will tell you that maybe after 1 year, the company does not meet up with the criteria, or the reason for them not to be able to get a seller is as a result of circumstances within their country. So if that is the case, you will need to reclassify the asset back to non-current assets. So when you are doing that non-current asset reclassification back, so you will need to do the accounting. You need to look for the depreciate the value for that 1 year. So those are the normal dimensions that they normally use. So if you are going to meet in the revision class, we will probably solve one or two of these questions. But pending that time is a thing that you can just go through, check the years, as I have said. They normally send it, I think they sent it last week or this week. So you can check the trend. When did they test IFRS 5? What are the questions? Download the pamphlet and you see it there. If you have any question, you can let me know, sir.
Okay. Thank you very much, sir. I'm grateful.
All right, sir. Mr. Dauda, that will be the last question. Mr. Dauda.
Good evening, sir. Can you hear me?
Yes, I can hear you.
Yes, sir. Please, it's not really a question. I just want to ask if you can just kindly drop this your note on the platform.
I will definitely do that immediately after the class.
Thank you very much. I appreciate you,
right,
sir.
So thank you very much. Have a wonderful night rest.
Thank you, sir.
Thank you, sir. God bless you. Good night.
Thank you, sir. Good night.
Thank you, sir.
God bless you. Thank you.